Welcome back, everyone, to another market recap. If you want to get better at trading and you're really trying to take this seriously, this is the ultimate way to study to get better. I'm going to be covering the market in complete detail, talking about all kinds of different trades you could have taken today. And this is essentially the ultimate way to study. If you really want to get better at trading, this is how you're going to do it. I'm doing all the work for you. You really don't have to do anything besides sit back, relax, and listen as I talk. So let's jump right into it. Going into the morning, we were chopping around. We pushed down into this fair value gap here. And as well, we had a new day opening gap that was right here. So we pushed into this new day opening gap. Here you can see that right here. And then we push up, push up, push up, and then we get our first trade of the day. This was a trade that not only Dodgy spotted, but I spotted. You can see we had this right here. The market was drawing to this high. We get this, let's see, this 1 minute fair value gap right here. And when we close above this, that would have been your entry. You can see Dodgy talks about this right here. Sorry, right here. He says done before market open. And you can see you don't enter until you actually get that candle body close above. But once you do, you're good to enter. And this one would have been good too. But you probably were not on the charts this early. This happened at 8:30 a.m. But we'll talk about that as well. You can see how once this closed above right here, this would have been a good entry to target this as well. You can see how all of these highs are essentially low resistance. So once you close above, you can enter and target this high, stop loss being a close back below this old bearish fair value gap. Same here. So there's that 2-to-1 restore trade, and then here you had this 1-to-1 restore trade. Once this closed above, stop loss here, or stop loss closed below the old fair value gap, and then boom, 1-to-1 restore trade. So you can see how order flow was pushing higher, even though we had equal lows, which is why I didn't actually take this trade. We had equal lows here, so I didn't take this trade. I was being pretty conservative. It goes to show, if you know how price is delivering, we were delivering from that new day opening gap, and then yeah, we got a breaker here. So Dodgy also talks about this as well. You can see this here.
Okay, let's see if we get this. I'll take this on the 3-minute if we get it. Remember, one trade a day.
So you can see this is a low, a high, a lower low, a higher high. We get to push back into that breaker. You get to close above, targeting these highs here. And so it's pretty clean trade. You're targeting unprotected highs here, and then we go and run those right away. We're delivering from a different setup, which is a breaker block setup. So this is pretty cool. And yeah, right to those highs. Then let's talk about the trade that I took that I really, really loved. So you had these equal lows, which I really wanted to see get hit. Now they did get hit, but not for a little bit later. I thought this was good because, once again, we're chopping around, so this seemed like a giant accumulation range. I was looking to target the other side of this range. So what happened is we actually had, I'm going to pull this up just so you can see it real quick. I'm going to pull it up on NQ1 here because it's not going to show up right on NQ. We were actually delivering from this opening gap. So that was the first thing I noticed. it's not right on MNQ, but that the opening gap's right here. Then we were also delivering from a 1 hour order block. So this is the most obvious order block in the world, right? You just measure the midpoint. And if I drag that over, you can see this new day opening gap overlapped with this order block mean threshold. So you had a new day opening gap, you had an order block mean threshold. So I thought that for sure, like, this was if we got an inverse off of this level, this seemed really, really good because we had equal lows below. And then as well, we had this BPR here. So this was a 30-minute BPR. And then on the low time frame, we got this inversion in 3 candles or less. Also, it's worth pointing out that if you measure out standard deviations of this, we were in that 2 to 2.5 area, so it was reasonable to expect a retracement here. So we get a 4-candle inversion on the 3-minute back to the downside. I entered here targeting these equal lows, and I should have taken at least a partial here or here, but I wasn't able to because I didn't have it set up on Tradevate yet. And so we hit this low, and you can see if I go down to the lower time frame, this is a 1-minute fair value gap, and so this is where the market got stopped. And this is on its own a pretty strong liquidity pool. So when you have this, maybe just take it all off at the low-hanging fruit, because when this happens, it's very, very annoying. So I went and wasn't able to take a partial, but I should have been taking partials. So that's my lesson here, and I got stopped out at break even. You can see this trade right here. We got that 3-minute inversion, targeting these equal lows, targeting this low resistance liquidity, and we hit that 3-minute fair value gap, and unfortunately I got stopped at break even. So kind of lame, but whatever. And then let's see. Then we had a trade from Amos. So here we have this trade from Amos, and he basically enters once at this breaker. You can see he enters at that breaker, and then he enters again at this breaker, overlapping with this fair value gap. So I'm going to pull up the chart again, and you can see that this happens. Oh, this happens all the way over here. So we're going to skip ahead a little bit. We're going to skip ahead to here, where you have this breaker. He enters a little bit here. Where'd it go? Enters a little bit here, and then he enters more once this breaker is overlapping with this fair value gap, and then targeting this low here. And we go right there. So I personally would not have entered on this breaker because that would not have seemed very high probability. But if I saw this one, I just didn't see it, I would have probably taken this, because this seems like a lot better of a breaker, right? So I would have taken this one, and this would have instantly hit your take profit, like instantaneously. So you put your entry here. Stop loss above the breaker. You take profit like at that low. That would have been a really good trade. So anyway, moving on. I'm gonna pull up my other screen here and just take a look at what else happened. So we came back to this new day opening gap, and you can see how perfectly we respect this to the exact tick. And so not only does it respect it once over there, but it respects it again here, and then it respects it again here. And I honestly just did not expect us to get such a strong reaction off of this fair value gap. Unfortunately, we did, and so once we inverse this on the 1 minute, essentially I was gonna get out on the 2 minute close above, but dude, I should have got out on the 1 minute close above, because if I got out the 1 minute close above, I would have saved all this profit. So I think in the future, I'm going to have to be extremely conservative. If I can't take a partial, I need to be extremely conservative. Look how much profit I lost on this trade. If I had instead gone off like even a 30-second inversion, right? Like if we inverse this 30-second gap, I'm getting out, right? So once we close above this on the 30-second, it's like, okay, that's a giant red flag. Why did we respect this fair value gap? I'm going to get out. So if I instead, after this happened, I got out here, that would have saved me a lot. So that's another lesson. But the main lesson is I need to have my trade of 8 set up so that way I can take partials. So what I'm going to do is I'm going to sell, for instance, let's say I sold 4 contracts here. I'm going to sell either 2 sets of 2 or 4 sets of 1. And then I will have them take profit at different spots. That's just what I'm going to have to do. I don't really know any other way around it, but I need to be able to take partials because this was such a big trade. This was a 3-to-1. I needed to be able to take partials. Then, as well, we had 830 overlapping with this new day opening gap. So you can see how well the market respects these levels here. Let me show you those. So look at this, 830 and the new day opening gap overlap with each other. This is extremely high conviction area. We sweep this low out. So I took this on demo. Here's this trade on demo. As well, here's the other trade from earlier this morning on demo. So I show how you could have taken this on demo. But I wasn't a fan because there was a bearish SMT and equal lows, so I stayed cautious. And then I took this one on demo. I actually took this one on demo. And we got a close above this old bearish fair value gap after sweeping this low, delivering from that new day opening gap, delivering from 830. And then a stop loss is a close back below this old bearish fair value gap. Since we didn't get that, I was still in this trade. We get a nice thanks for the liquidity wick. And then we get a sharp move higher to take out this liquidity. So excellent trade. Then you can see how well we respect these levels. Get a push back into 930 and then a move higher. Let's see what else. So moving on. Today was simply a choppy day. It was hard because although we had news come out, it wasn't until 10 a.m. So, and as well, we have FOMC minutes coming out later. And we had a giant overnight move in Asia. So if I go pull up the higher time frame chart here, boom, where is it? We had this giant overnight move in Asia, so it's just like, where did it go? Okay, giant overnight move in Asia, so New York was probably going to be choppy. And you can see, where do we respect? I'm pretty sure this is wrong. Hang on. Where do we respect? This new week opening gap. You can see how we're pushing back into it over and over and over again. We're accumulating at this new week opening gap. Seems to me like the market wants to push higher, especially because look at this. Generating all this liquidity. And we're just, the market seems to be accumulating orders at this new week opening gap. That's just my guess is, but Anyway, as well, you can see that we swept out previous day's low and we had a 5-minute inverse for value gap. Now, this was actually pretty interesting because this was just really, really clean. Once we closed above this, we not only ran this low resistance liquidity, which you take most off here, but if you wanted to hold a runner just for fun to maybe, like, let's say this bearish order block, or maybe you take some off at the new week opening gap here, right? This would have been a great trade. This would have been a 2.3 to 1, or maybe even like a 3.5 to 1. But I'd probably take most off at the end of this trendline liquidity here. That's a 2 to 1. That's great. Stop loss being if you close below this old bearish for value gap. So really, really nice trade. And then this goes along with the trade that F3 took. So I'm going to pull up F3's trade. Here you can see this. He says he got an 8 to 1. I'm going to turn off the volume because I don't want to potentially get any copyright. But look. Looks like he's entering possibly off this breaker. This high, low, higher high, lower low. We got a breaker. Push into it a couple times. Then we got this fair value gap here. It became an inverse fair value gap. And he's basically going off of the fact that we swept London's highs here. So if I go over to the other chart, you can see we swept London's highs. Once I meant Asia, sorry. Once we sweep Asia's highs, this becomes a high probability area for a reversal. And so he traded this way early in the morning, but I believe this is what he's trading right now. No, sorry, he didn't trade that. He traded $9.20. Oh, he's trading the 15-second chart. So he took the same trade as I did. But he's trading the 15-second chart, and he's basically saying, like, look, we had a breaker here on the 15-second, delivering off of this high confluence area, and then he takes all the way down. And man, if I knew that this was such a high confluence area, because you had that new day opening gap and this new, yeah, here you can see that new day opening gap. Is that, I'm a little confused. Anyway, you get the idea. This was a good place to take profit. I should have taken profit here instead of just expecting these equal lows to hit. I should have been taking partials all through here. So the main 3 lessons are I should have taken partials all through here, and then especially once we close back above this 30-second gap, I should have got out the rest of my position. And then as well, so I need to step my stop loss and take profit. Actually have it set up on my Tradevate, because right now I'm just trying to do it manually, and that's not really working very well. So anyway, we got a trade from the engineer. I believe this could be a very similar trade. Yeah, 5-second market maker sell model. Oh my gosh. So he's as well trading off this high confluence area. It's that same trade, that 950 to 955 trade. And so engineer takes this on legit the 5-second. That's crazy, but look at how clean these candles look. These candles honestly almost look like 1 minute candles. Look at how clean these look. And so you remember how this was such a high confluence area, right? This was a new day opening gap. If it'll show up. Maybe it won't. Okay, there's that new day opening gap. And remember how that overlapped with that mean threshold, right? So we get high, low, higher high into that new day opening gap, mean threshold, high confluence area, standard deviations lined up, and a couple other things. Well, the 30-minute BPR. So then you can see how it's all fractal, right? Stop loss above this breaker. And then imagine you could have had a, oh my gosh, 7-to-1 risk reward trade, which is crazy. If you have this amount of accuracy and precision and you're able to operate quickly like that, like if you can operate on the 5-second chart, like that's genuinely very, very impressive. But you can see how this would have worked out pretty well. Then we had this trade in the afternoon that not the afternoon, but the late morning that I talked about a little bit. Same thing, delivering from, so this was that new day opening gap. We get this 2-minute inverse for value gap here. So just remember, this is a new day opening gap. I'm going to get rid of this so it's not so overwhelming. New day opening gap, delivering from a new day opening gap, we get this inversion. Or no, this is a 2-minute inversion. And then notice how we don't get a candle body close below this old bearish for value gap. So you would stay in this position and you can target all this low resistance liquidity, and then boom, right to that high. Stop loss if we close below this for value gap. So I would have to take profit here. So basically a 1.5 to 1 or a 1 to 1, just depending on where you put your hard stop loss, but your stop loss based off of if we close below this old bearish for value gap. So that about covers it for the most part. Yeah, I think I'll just end it there. But today was a maybe more difficult trading day because we were so choppy. But you would have known that we were going to be choppy because we had a giant overnight session during Asia. So with that, I will see you guys in the next one. Bye.